Here we are at day 5 of week 9. We're 3/4 of the way through with the home study course, and I hope you're looking forward to joining us here, right here in the trading room for your personal tutorial. And what we're going to do today is we're going to look at the Elliott wave in detail. We're going to look at a couple of charts. We're going to look at one chart that has 5 waves, and then we're going to break that chart down into the first, third, and fifth wave, and look at how the family resemblance is, and also how we count those waves using the awesome oscillator. So let's get right on to it. Day 5, week 9. We're going to count Elliott waves in real time now. And this chart is a day chart, and we're going to break that down to intraday. But just looking at it before we put any helpers on here, we know that this is going to be wave 3. We know that wave 4, minimum requirements of wave 4 have been met when this crosses 0. One of the things we tried several years ago is trading just this AO. And this is kind of a, we mentioned this before, but it's kind of a little game. If you want to make profit in stocks and commodities, a simplified way to do it, we don't recommend this, by the way, because you can do better than this, but simply watch this AO. When it turns green, which means that this bar is higher than the previous bar, you don't even have to know what the price is. You just simply call the broker and say, buy at the market. Then you hold it as long as it's green. When it turns red, you call the broker and say, sell at the market. Then when it turns green again, you call the broker and say, buy at the market, sell at the market, buy at the market, sell at the market, buy at the market, sell, buy, sell, buy, sell. Now, you will not be maximizing your income or your proficiency as a trader, but it's kind of interesting to be able to tell war stories to other traders that you can make money trading stocks and commodities without even seeing a price chart and without even knowing what the prices are. Just a little bragging point, but we want to do much better than that. We want to get a lot more precise than that. So let's look at this chart. This is wave 1. This is wave 2. Now, there are a couple of interesting things about this particular chart. Number 1 is that wave 2 retraced 100% of wave 1, which in Elliott wave theory, that's quite all right. It can retrace 100%. It cannot retrace more than 100%. So then we come up here, we find that wave 3 is there because we have the peak in the oscillator. Wave 4 comes back here. The minimum requirements are met again when the oscillator crosses the 0 line, and wave 4 retraced 38%. Normally, 9 times out of 10, wave 4 will retrace someplace between 38 and 50% of the time. I think I misspoke there. It's not 9 times out of 10. It's about 80% of the time. This one retraced exactly 38%. Wave 2 retraced 100%. It also crossed 0. The AO crossed 0 there, and that gives us an idea that this is wave 5. Now, again, what we're going to do is we're going to break this wave 1 down into a smaller time frame and look at it. And then we're going to break wave 3 down, look at it, and we're going to break wave 5 down and look at it. So we can count the Elliott waves within waves, within waves, within waves. It's kind of like at the seashore. You can be in different wave counts depending on what time frame you're talking about. If you're talking about the tides, you can have the tides coming in when the waves and the ripples are going out. You can have the waves going out when the ripples are coming in. So it's wave within wave within wave, and that's how the universe works. Let's look at wave 1, a closer look at wave 1, and we'll put everything up here all at once. The wave peak, the oscillator peaked here, did not go below 0 until here, so we know that that's wave 3. It went below 0 here, and notice that it came down, had a long fourth wave here. And remember we said yesterday that the fourth waves can oftentimes take time-wise the amount of time that 1 through 3 did. It took even a little bit longer there. We had divergence between wave 5 and wave 3. The price was higher here, but the momentum was lower there. So the wave 1 within that 5 waves of the last chart has also 5 waves. And look at this. Wave 5 within wave 1, wave 5 of wave 1 here has a very clear Elliott wave formation, even though we don't have an adequate number of bars. If we took this wave 5 of wave 1 to a smaller time frame so that that wave had 140 bars, you would have a very similar configuration on the AO. Okay, let's look now at wave 3, the most impulsive wave of the 3. And we want to look, this is the wave 3 inside. And we have a wave 1 up here, a wave 2 here, a 3 there, a 4 there, and a 5 there. And all of this, again, the secret of counting the Elliott wave is counting the wave on the oscillator, not the price bar. So we had a peak on the oscillator, which is one of the primary purposes of the oscillator. It will always, 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 always peak on the third wave. We also cross 0, which does not tell us that wave 4 is over, but it does tell us that the minimum requirements for wave 4 have been met. And just a hint here, or just another suggestion, look at this bar here. It is a bullish divergent bar. And the price went immediately up. And it also, there's divergence between the price in end of wave 3 and 5 and the momentum between 3 and 5. So that's the third wave inside of that wave we first started looking at today. Let's now go to wave 5 and have a closer look at wave 5. This is wave 5. Wave 5 appears to have an extended 5 wave, but still, even if it's extended, we still have the oscillator working right. Here's the peak on the oscillator, telling us that that corresponds to wave 3. It crossed 0, did not cross 0, notice, until here. I almost did here, but there. So at this point, that's where the minimum requirements for wave 4 have been met. So had you been trading this, or had we been trading it, we would not look for a place to go long until here. We would not go long there, because it had not crossed 0. At this point, we'd be looking for a place to go long, and here's your first fractal outside the mouth, and you would have taken most all of that profit home. And lastly, we have divergence between 3 and 5. Let's look at some unmarked charts now. Looking at that, just as a glance, you should be able to tell and know immediately that this bottom here on the chart that we're looking at is a third wave, not a fourth wave, and that there's no reason to look, we think it's going to go lower, but there's no reason to get short until after this crosses 0. That should be an instantaneous recognition. Let's look at a chart on the up move now. Again, we have a peak here, and at that point, that looked like it was wave 3. But then when this peak exceeded, on the AO exceeded that, we knew that wasn't wave 3, that was wave 1, and now we're in wave 3, and at this point, we have fulfilled the minimum requirements for wave 4, so we can start to look for wave 5. If we wanted to get more precise, we could break this ABC, if it is an ABC, down into a smaller time frame, and we would be able to count the waves precisely there. And notice that this wave 1 normally will retreat or will retrace between 50 and 62%. It did exactly that. Also notice that there is a squat here, and it is a bullish divergent bar. Hopefully, all of this material is now beginning to paint a very nice broad stroke picture of how the market works and how to trade the markets. Let's look at one more chart, and this chart also is a aggressive move up. And the first thing we want to look at, and when we look at any chart, the first thing I look at is that peak. That we know that's going to be a wave 3 of 1 degree or another, and we have 140 bars on this total wave count up here. So we know that that is wave 3. Now again, since this did not cross 0, we know that that's 3 of 3, that is 5 of 3. So the actual top of wave 3 is here. And then the wave 4, the minimum requirements were met here. Wave 4 came on down, and notice we also had a bullish divergent bar. And this bullish divergent bar had pulled away from the alligator. So if we were very aggressive, we might choose to get on board there because the risk is very little, and we would have an ideal place to get long. And here we have, again, the wave 3 and wave 5, but if we wanted to analyze this particular wave, we would have to go to a smaller time frame so that we could get from this point here, the beginning of wave 5 to the end of wave 5, into 100 to 140 bars. So what we've done this week is we've looked at the 5 magic bullets, we've looked at the Elliott wave, how we count the Elliott wave, and once again, if you have any problems with this, we suggest that you go to a couple of 3 other sources that you have in your home study course. One is the book, our first book, Trading Chaos, and the other is the Computorial, and then the third is Investor's Dream. And with that and with this, you should be well prepared. You should be a better Elliott wave counter than probably anybody you know, and particularly any trader you know. This is about the end of week 9. We still have 3 more weeks to go. This weekend, have a very, very special date with your IT. Take care of yourself, have some fun, read about the market, but don't become obsessed with the market. Remember that if it's not fun trading, you're doing something wrong. And hopefully you're getting better, more confidence and better prepared to come to our personal tutorial. And when you come here, we're going to trade together, and hopefully we're going to make a lot of profit together. So have a good weekend. We'll see you back here next week for week 10 of the 12-week home study program. Thank you for being with us.